Hello everyone and welcome to the Nomad Hedge. In today's video we're going to take a look at the technicals of the market indices, including the Russell 2000, and see how much further upside potential these indices have ahead. But as always, if you're new here, consider subscribing to this channel and hit that like button if you're enjoying the content in this video. So the market got a boost on Tuesday after the release of the Producer Price Index, or PPI, which showed wholesale prices increase 8% versus expectations of 8.3% and slowed down from a year ago at 8.4%. The core PPI fell to 6.7% versus 7.1% year before, and the month-over-month increase was flat. And the markets took this as good news, with both the Nasdaq and the Russell 2000 rising over 1%. Let's see how the market indices fared out during the trading session, starting with the S&P 500. So the S&P closed up 0.85% on Tuesday, but it closed a little bit lower during the trading session here. Possibly some short-term traders trying to cash in just before hitting this potential resistance line or this higher trend line within this rising wedge. So we do have this open gap here, which gives us maybe room to the upside here. But again, we do have this orange line here, which is the 200-day moving average. So it could act as resistance like it did back in August here when we had the previous bear market rally. But if we take a look at some of the indicators here, we have the RSI, for instance, and we're not quite overbought yet. I mean, this thing has been going above 72, topped at around 73 previously. So this thing has some upside potential. And if we take a look at volume, unfortunately, I mean, this just shows that volume was not quite strong during the trading session, mainly due to the fact that we got some news about Eastern Europe and some missile strikes, so maybe people just stayed away from the market, who knows. But it just shows that volume is not strong enough to support a break above this trend line here, and we're not even close to the 200-day moving average. And what's interesting about the MACD, for instance, I mean, we've had almost like 4 days of solid green bars here on the histogram for the MACD, which is showing us how the momentum is for the S&P. But if we're getting a 1 day of a green light here, which would signal sort of like a slowdown in momentum to the upside, that could spark some alerts. Maybe this rally is showing some signs of exhaustion. But if we take a look at the ADX, for instance, we're seeing here that sellers are slowing down here. So this could perhaps give us an early sign that buyers are starting to get a little bit exhausted here. I mean, if we take a look at the S&P, if we're getting above the 200-day moving average, we need to ultimately break above this lower high trend line here if we're going to be sort of like in a confirmed uptrend. But for now, treat this as a rising wedge here, which is a bearish pattern. And so any sell-off from this point, I mean, we're also above some of the key moving averages here quite a lot. So we need to perhaps maybe test the 21-day exponential and just see how this thing's going to play out in the days ahead. Let's also take a look at the S&P here on a weekly chart. And as you can see, we're closing into this 40-week moving average, which is another way of saying it's a 200-day moving average. But what's good is that we're above this 5-week EMA and the 10-week SMA as well. So we are in a short-term uptrend here. And if we take a look at the RSI, for instance, I mean, we need to clear a break above this 55, 53 level. So last time we were at these levels on the RSI, that's when the dead cat rallies slowed the momentum and we saw a complete sell-off right after. So again, if we take a look at the RSI here, we need a clear break above this 55 level. But as you can see now, it's sort of like stalled a little bit here at 50. So it's going to be interesting to see in the days ahead how things fares out. On the MACD, for instance, we do have a clear early buy signal here, but we are not seeing any signs of a slowdown in momentum. So the momentum is still intact for now on a weekly chart. But again, treat this as a dead cat rally until we are at least above this lower high trend line. So the key here is to watch the 40-week moving average. Moving on to the Nasdaq, and as we can see here, we close up 1.38%. And we find resistance here just at the Fibonacci extension level of 0.5. So the good news is that we're above this 50-day moving average. Last time we just poked above this thing, that's when we saw the sell-off here of this previous decline. But the 50-day has been a major resistance line. It's also been a support line here previously. So if we're getting above this fib extension of 0.5, we can look towards the 0.618 on the Nasdaq. On the indicators side, we can see that the RSI still has some upside potential here. 70 has been a critical level here for the Nasdaq. And if we take a look at the MACD, for instance, we're also not seeing any signs of slowdown in momentum. So the momentum to the upside is still intact as long as we have green solid bars here. Looking at the ADX, we can see that buyers are still in control here. We do have an early buy signal here as long as we're above this 25 level, but we don't have a solid buy signal until this blue line here is also above this critical 25 level here on the ADX. But for now, the fib 0.618 is the target for the Nasdaq as long as we can stay above this fib extension level of 0.5. Let's also look at the Nasdaq here on a weekly chart, and as you can see, we're also above this 5-week and the 5 EMA moving average here. So unlike the S&P, we still have some room to the upside here before we're closing into this 40-week moving average. And if we take a look at the RSI here, we can see that the 50 level has been a resistance line. So but we do have a positive divergence here on the momentum side, and if we take a look at the MACDs here, we do have a early buy signal with a positive diversion as well. So we need a clear break above this 55 level here on the RSI before we can talk about maybe treating this other than a dead cat rally. Let's also take a look at the Dow Jones Industrial Average, which has been my favorite or the best performer here during this dead cat rally, if we want to call it that way. But as we can see here, we crossed above this critical extension line of 0.618 here. So we just have to make sure we remain above this thing. But everything is looking like things are starting to break down here, and we do have a clear rising wedge. So possible support here. I mean, if we're going to break below this high-low trend line, we do have the 200-day moving average. The 21-day exponential is trying to catch up here. We do have this rising 50-day moving average, which is quite bullish actually. So it's going to be critical that with these we're getting support here at the 50-day moving average. But again, I mean, if we're not getting, if this thing does not break down here, we have to look toward the line of resistance at the Fibonacci extension 0.786. But if we'll take a look at this, some of the indicators here, I mean, it is pretty overbought here on the RSI. We're seeing a sell signal here on the money flow indicator. If we take a look at the ADX, for instance, we do have an early sell signal here on the ADX. This green line here is crossing below this blue line here. And the MACD have not yet given us a sell signal, but things that just by looking at it, we could clearly see that in the days ahead, we could possibly get a sell signal here. So for short-term traders, taking some profits out of this rally would not be a surprise in the next days or in the days ahead. I mean, this thing closed at 0.13% on Tuesday. So it was almost like getting into a flat or negative territory. So yeah, keep an eye on the Dow because it's been leading the index. So it's most likely going to lead to the downside if we're breaking below this rising wedge. But it's going to be interesting to see this thing, like we saw, for instance, the Nasdaq, that it still had some room to the upside, right? So if this thing breaks down, leading the index down, maybe we could possibly see the heavy tech Nasdaq still continue into the upside. Quite interesting things happening in the market now. And yeah, I mean, again, take a look at this extension here, and possible support, critical support, I would say, is the 50-day moving average. So lastly, let's take a look at the Russell 2000 or IWM here. And as you can see, we're above this golden ratio here, and we're starting to close into this lower high trend line here. And if we take a look at the indicators here, we do have a negative divergence here on the RSI, and the money flow indicators got pretty overbought here. So these two could give us signs of maybe a short-term pullback. MACD is still intact here, and so is the ADX. And on Tuesday, we closed up pretty high on the Russell. But this thing is trading above the 200-day moving average. And if we would break below this rising wedge here, we would possibly look towards maybe filling this open gap here, which would also coincide with this 50-day moving average. But on a technical level, I mean, you could possibly treat this as a head and shoulders pattern. So if this thing would play out, we could look towards a target to around 126. So it's pretty important to watch the technicals here, especially on the Russell. And so we're seeing also a possible breakdown on the Dow Jones. So if the Dow Jones is going to lead to the downside, we'll probably see the other major indices breakdown as well. But if we would break above this lower high trend line here, we would have to take a look at this resistance line here, which would be around 200 on the IWM. Let's quickly also glance over at the dollar index, or DXY, and as we can see here, we're reaching oversold levels here after we broke below this higher low trend line here, and so we're almost reaching support at the 200-day moving average. So a bounce to the upside for the dollar index would not be much of a surprise, considering how much we've been rolling over to the downside here. So we know that the dollar index have sort of like an inverse relationship to the stock market, and that when the dollar goes up, stocks tends to underperform, and also vice versa. So because we're reaching oversold levels here, any move to the upside will obviously have a negative effect in the market, so we could possibly see some sell-offs here in the days ahead. So that was it for today's video. Thank you so much for watching, and again, if you haven't already, please consider subscribing to this channel and hit that like button if you're enjoying the content in this video. I'll see you guys in the next one. Take care.